Today we're here with Christine from Go2 Finance Brokers, and we're talking about low doc loans. Commonly when people are going for a loan, one of the most common terminologies you hear is low doc loan. So who would take out a low doc loan? What is a low doc loan and what do they need to provide?
Low doc loans are most popular for our self-employed applicants who have been in the industry for less than 2 years. So the bank will mitigate the need for their financials and their tax returns and use 6 months worth of their transactions and a letter from their accountant confirming their income and not need anything else going forward. Generally, the rate is a little bit higher than what's on the market at the moment, but it's a short-term fix for a long-term goal.
Okay, so essentially self-employed, a sole trader,
Company, yes.
under 2 years.
Definitely.
Okay, and so they're having to pay a higher rate because they're probably a little bit riskier?
It's just a little bit riskier, definitely. You're not providing them, usually if it's a self-employed deal, they're getting a lot of information, tax returns, company, individual, ATO notices. So they're saying, you can't provide us with this and we understand. We'll still give you the loan, but we're going to charge you a slightly higher fee.
So how much, I mean, look, on average, right? I would imagine that would vary.
Varies from bank to bank.
And time to time, give or take, percentage-wise, are they paying sort of 1%, 2%, 3% higher?
Like you said, depending on the bank, you also have to take into consideration what the LVR is, if it's an investment, if it's an owner-occupied property that you're moving into. But roughly, case by case, roughly it's about 1% or 1.5% more than the standard rate that you can see in the market.
But like you said, they're actually getting access to funds that they probably normally wouldn't have?
Definitely. Sometimes their dream house came on the market and they want to purchase it. If it was me, I'd be okay with paying a little bit more interest for 6 months or a year, and you can always refinance once the company has been registered and active for 2 years.
Okay. So you've got, say, sole traders, corporations, or companies. Now, what do they need to do? Right. So what would a sole trader or a business owner need to do? What documents do they need to provide to you and the bank?
If it's a low doc loan, I guess the standard as per every application, it's ID, rates notices if it's a refinance, and rental statements if it is a refinance from bank to bank, 6 months worth of transactions. When it comes to their own income, being registered for less than 2 years, we understand financials are not available, 6 months worth of their main banking account, and an accountant written letter stating what the income is.
Okay. And then would the bank need to do a valuation on their asset and the asset that they're buying or acquiring?
Yes.
Okay.
So if they're buying a property, you always need to have that valued. If they're refinancing from bank to bank, again, it always has to be valued.
Okay. Is there anything else that they should know if you're getting a low doc loan?
I think there's a stigma out there on low doc loans that because the rate is so high, it's a waste of money or it's harder than a regular loan. In fact, you're providing less documentation than a full doc loan. And like I said, if it was me and I urgently needed some cash from my property, if I had my dream house come on the market, I would pay that for 6-12 months. It's short term. And then refinance after a little while to get a better rate.
Okay, so if you're out there and you're looking to get a loan, especially if you're a business owner, you're looking to get a low doc loan, speak with Christine and the team at Go2 Finance Brokers. They're only too happy to help and make sure that you secure your next investment property or that dream home.